Hello and welcome to Send It by OKEx Insights. I'm Maxwell Koopsen. I'm the senior copy editor at OKEx Insights. I'm joined today with Hunain Naseer, a senior editor. How are you doing today, Hunain?
I'm good, Max. How are you?
Doing well, thank you. And also joined, as always, with Adam James, another senior editor. Adam, how are you?
I'm good. I'm doing well. Just enjoying my new iPhone as people on Twitter who follow me will know. I posted a picture of like the first iPhone I ever had, which was the iPhone 2. And I said that was my new one. That was my joke of the day yesterday. So, news of the week. I'm really disappointed that you guys didn't do it with me.
I did not know the tempo or the notes for this thing.
One, two, 3, 4. Now he does.
Now,
okay.
Yeah, now I'm gonna leave
in
you guys
post.
hanging.
We'll just put it together. It's fine.
The biggest story in the world of non-fungible tokens this week was yesterday's minting of ArtBlocks Curated. Now, those listening, it won't be yesterday. It's yesterday at the time we're recording this, but the too long didn't read here is that 1,000 digital sculptures from generative artist Peter Pasma sold out very, very, very quickly on ArtBlocks Curated, which happens very frequently anytime something drops on Curated. But this time, the demand was so high that it created a block reorg. For those that don't know, in simple terms, a block reorg is when a block is mined and confirmed, and then later that block is retroactively discarded. This happens quite frequently, but it's usually not a big deal. It's only a big deal when it leads to a hard fork or a contentious fork. Usually when a reorg happens, the chain that should be ignored, let's say, gets ignored, and the correct chain continues. Now, in this case, what happened was it meant that some users successfully minted an NFT, but then they didn't actually get that NFT because another address had minted the NFT as well on a different block that was on the dominant blockchain. So in layman's terms, it means that people minted NFTs, but they didn't really get them. And people aren't happy about it. So an ArtBlocks representative on Discord shortly after basically said, this isn't really our fault. It's not really something we can control with first come, first serve mints, but they did note that their UI for their new update on their website should help address this issue so it doesn't happen again. An ArtBlocks representative in Discord later said that, to paraphrase them, it's not really their fault. There's very little they can do because it's a first come, first serve mint, right? And whatever sort of like a bribe isn't the right term, but I'm just going to call it a bribe. Like whatever sort of bribes with miners or whatever take place is sort of outside of their control. But they do.
Yeah, or outside of yeah.
And they did also note that their UX, they have a new UX, I believe, that's currently in beta. I don't think it's out yet, but that is supposed to help fix this. But anyways, long story short, some people who minted NFTs got screwed, and that brings us.
Did they get screwed? Did they get screwed just because they didn't get their NFT, or did they lose their gas too?
You would probably get the gas back if the network is restored to a previous block, because then your account balance would also go back to the previous block, I would imagine, but I'm not an expert on this.
I'm not sure either, because the latest that I saw from users was that they were complaining because they want their not only their money back, but also the NFT that they bought.
Yeah. The NFT is probably gone. Not probably, definitely gone. Like, for
Yeah,
example,
just
when you do a
lost.
reorg thing to recover stolen or lost coins, obviously the point is when you go back to that block, your wallet, which had lost the coins, would become whole again. Like the coins would be back there. So I would imagine the gas would be back there as well, just not the NFT.
I assume that whatever they paid for the NFT as well, like let's say they paid 5 ETH, which I believe was the cost to mint. The auction never dipped below 5 ETH. So I assume they got that back.
Yeah. Look at that back.
Those blocks would have been discarded.
Yeah.
Also, that
So
would be
sucks.
crazy. That would be suicide, right? If all those people lost their 5 ETH and did not get the NFTs.
Yeah.
Yeah. And
It's a
then
very,
this
very horrible bad day.
Yeah, and this follows an earlier mint that took place on Monday, I believe, which was Time Magazine's Timepieces. Now, this collection of NFTs, among other things, provide like a lifetime subscription to time.com. And these, I went for these. I didn't go for the ArtBlocks. I did go for these, and they sold out like instantly. Gas skyrocketed. I tweeted about it when it was happening. It went up to like 10,000 GUI, which is the highest I've seen in a long time, at least, which was just crazy. And I believe that they basically insta sold out. I mean, it doesn't feel instant because Ethereum doesn't work that fast, but in reality, because people paid so much money in the gas fees, these things were gone in like a minute. It brings up a larger discussion that I want to get with you guys of just NFT minting in general. We have the concept of a fair launch, but how in a decentralized manner, how can it really be fair? Because you might argue a first come, first serve method is fair, right? Whoever gets there first, or in this case, gets there first and or pays the most, gets the NFT. You also can have a lottery system of sorts. That's more of a centralized thing though, so I guess we don't need to get into that. But you can also have whitelisting of addresses, which has proved problematic with without naming names, like various PFP NFT projects have had sketchy whitelists and whatnot. But there's other projects that have had good, like EtherWorks is a good example now, I guess, that has a whitelist that I haven't dug too deep into it, but it appears to be rewarding early people with early interest who are in the Discord early and early community members, which kind of also seems like maybe the way it should be. But what do you guys think? I mean, what do you think is a fair launch? Do you think it should be a first come, first serve? Who pays more? Early community members get access through whitelisting? I'm curious about your guys' thoughts on this.
I mean, I feel like if we're going to go with the decentralized narrative, then it makes sense that people who come first, they get it first. But when you talk about the highest pair getting, the privileges or whatever, or being able to mint the NFT, then it's not so decentralized, right? Because then if it eventually turns into whoever can pay the most gets everything, then you're actually kind of creating another 1% thing in the whole crypto space where people who are already rich just keep getting the best opportunities, right? So you want the widest possible net of people to have access to these opportunities. And it's also in the benefit, it also benefits everybody in the community, because the more widespread it is, the bigger the network effect and the more kind of perceived value of that token or that project or that NFT project collection. But then when you talk about whitelists, obviously that's centralized, and when you talk about a lottery, that's centralized as well. I'm not sure, because I haven't really looked at a lot of NFT projects, but I'm not sure if anybody does a smart contract that does like a random number generation. So for example, anybody can kind of, let's say you can just send like the lowest, like a mint fee thing. I'm not sure, because obviously mint also costs a lot, but you could probably send just a little bit of Ethereum to that smart contract to kind of enter into that lucky draw thing. And the smart contract could generate random numbers and distribute those NFTs randomly on its own without any central authority. So you don't have to question who does the draw or how those lottery tickets or whatever are done, as long as the smart contract just does it on its own and it's provably random. I think that would be a decent solution. I'm not sure if anybody does that or how that would work though.
That's cool. I didn't think about that. Yeah.
The other thing I neglected to mention as well is the inherent problem with the first come first serve model, right, is botting, which is something we've seen. I mean, that takes place outside of the cryptocurrency industry. I mean, sneakers being one of the most notorious things that are botted. Like it's incredibly difficult to get a pair of like hype sneakers or
PlayStations.
PlayStation 5s, yeah. And not just using bots, but also proxies. And there's also like a resale market for bots. Like I know people who code bots and then they sell those for a lot of money.
Yeah.
But then they have a better version of the bot anyways. But that's something like with the timepiece launch. I mean, that was botted. That was just botted. So, and without getting too deep into technicalities, right? There are like people are able to, if they, depending on how the smart contract is set up and deployed, people are able to see exactly when something is going to go live, and they're able to mint instantaneously using bots. And
I mean, I've seen people interact with the smart contract directly and just get bypass the website interface that a lot of these NFTs have.
That's what I'm gonna, the reason why I have so few NFTs, I think it's because of bots. Like the most NFTs that I have are through a more centralized service, like, I mean, NBA Top Shot, just because, I don't know, I just feel like it's fair. And if I don't get one, like if I don't get a number, so for anyone who doesn't know, like, essentially it is like what I think sneakers will do. Like you get kind of like in a waiting room, randomly assigned a number. And then, if you're, within the, realm of, or the number of NFTs that are available, then like, you just wait your turn and then you go and buy it. And, if I get a number that's outside of the queue, then it's, well, at least I feel like it's fair. Where, I don't know, I feel like it would be very frustrating to be, trying to get an NFT that you really like it, like, oh yeah, I like this art, I really want it. And then have it come out that it's like, oh, you were never going to get it anyway. It just seems like it would be frustrating.
Yeah, there was another NFT mint not that long ago. I don't know if it was the 7s or if it was the 9s. Can't remember the name of it exactly, but that was like ultimately botted to the point where we wrote about it in News of the Week 2 or 3 weeks ago, to the point where like of the distribution became highly centralized. Like I think like one wallet or two wallets in particular had like the VAT, like a lot, like thousands of these things. And to the point where, and the project leaders were like, they coordinated with them to like not sell them, or not crash the price or whatever. And it's like, I don't know, rest in peace. So Maxwell, you mentioned NBA Top Shots while we were talking about these NFTs, which you and I have both participated in. I don't participate in it anymore, just out of laziness more than anything. Too many NFTs to keep track of. I don't know if are you still participating in the drops and stuff?
Yeah, I mean they're a little bit less frequent now, just because the season, like the series 2 ended, and they did some like a summer best of summer something, and like the WNBA had some drops. But I got a pack the other day, and still free money, so why not?
Nice. The reason, so NBA Top Shots creator Dapper Labs now plans to launch an NFL version, the National Football League, for our European viewers who might not know. But what do you think about that? I mean, I know you're not a big sports guy in general. I know you're not an NBA fan, but you are a Top Shots fan. So
I am.
Are you looking forward to the NFL version?
I am. Actually, it's like I'm not a religious sports fan. I don't watch the games, but like if I'm back in the US hometown, like a bunch of my friends are huge Lions fans, and it's a great Sunday, kind of tradition, just like, yeah, go over, hot dogs, watch the game,
Watch them lose.
Yeah, we've had a few good seasons recently, but yeah, it's a sad story. but yeah, I don't know, I just I feel like the moments in an NBA game start to kind of just feel like there's just constant scoring. The way that the game basketball is, like, just the way it works is a lot of like fast scores, like dunks, 3-pointers, layups, all of that. Whereas I feel like the NFL moments could be really, really cool, because you have like that huge Hail Mary pass, and or a punt return for a touchdown, and like that to me just feels like a more valuable moment to have. I'm sure NBA fans might feel differently about like the sport that they love, but yeah, I'm excited for the NFL. I don't know if it'll have as much broad appeal, like more people around the world are, I think, into basketball than American football, but yeah, football's more my sport, even though it is a lot of like standing around and like waiting and then like bolts of action. Like there's a lot of like coaching strategy. It's like a really like strategic game.
Yeah, it's like a chess match.
Yeah, and that's why I think, I don't know, I just think that the NFT moments from a NFL game will be like just really, could be really, really cool.
Then that's what I wanted to bring up, like specifically, what kind of moments would we have? Because there's some NBA Top Shot moments that I think are pretty boring, and generally it's because like I think they have to get someone from like every player in the league, I think, has to have a moment. Don't quote me on that, but I think that's the way it is. So the result is some of the moments aren't that great. It's like, oh, a cool assist. But in basketball, it's like, unless it's like a really cool assist, it's like, okay, man. So in like the NFL, like what kind of moments are you going to have for like a left tackle? It's like, I mean, you could have like a cool like block, and they literally block the guy to the ground type thing. But like, is that really that cool of a moment versus like a running back, like breaking like 6 tackles and scoring a touchdown or something?
No, that's true.
So I'm
support. Yeah.
So I wonder what like
players.
I wonder what the lower tier moments will be like, because it's like touchdowns and stuff are cool, of course, but like cool catches and all that stuff. But what about like, are you just going to have like a tight end running like an out, or like running like a 10, turn left, and then just like catch, it's like first down, yay. Like, I don't want that moment.
Yeah, no, I mean, unless there's like a really,
you're listening
like,
to
athletic,
I don't want that moment.
Maybe like fumble recoveries, or like like something like that for like the tackles, or sacks for like the defensive line will be like good moments for sure.
Definitely.
But yeah, like a punter, like yeah, good
kick. It's like the punt where they get it, like to bounce out of bounds, like within the 10-yard line or something. It's like that's cool when you're watching the game. Yeah. Like, nice punt. But do you want to own that moment?
Yeah, maybe not. But I mean, all right. So like maybe they'll make those like the super rare ones, which would be a little disappointing. It's like, wow, a 1 of 10 punt return, or like punt.
Yeah. But I also wonder too, because if what I said is true and every NBA player needs to have a moment, I wonder if that would actually be the case with the NFL, because simply put, there's more players. I think there's certainly more players on a team.
Third string quarterback, like
and it's like, how many NBA teams are there versus how many NFL teams are there?
It'll be interesting to see how they break it down. But I
think you'll have a lot of punters. So you're putting one of the punters, like you have a lot of punters versus like the NBA, like everyone, you have different positions on the court, but everyone does the same thing.
Yeah.
Everyone's trying to put the ball in the basket and stop the other team, but like by dribbling, passing, shooting.
Right. Yeah. There's not like a bunch of like, I don't know. I feel like, of course, the athleticism, not to compare the athleticism, but like that football, like that Hail Mary pass, like, catches it with one hand, keeps his feet in bounds. Like, I don't know, I just really appreciate that, like just that human athleticism that shows in like one moment that's really pivotal for the game. So yeah, I want to own those moments.
Yeah.
Hunain, do you watch American football?
No, I'm vaguely familiar with it, but it's cricket for me. Yeah.
Yeah, Hunain, sorry. That's why I was going to bring this up. That's why I didn't like directly, include you in the conversation, because I assumed you don't care. But would you like cricket top shots?
Yeah, I was just going to say cricket.
Yeah, for sure.
Something
Cricket
I
top
don't
shots
know.
would be good, but I imagine the market for them is kind of in like a niche market. I can see British people wanting it and people in the subcontinent, but not many people outside those regions. But it'd be interesting for sure. I did read about a couple of cricketers kind of minting their collections. I'm not sure what blockchains they minted them on, but they didn't get a lot of hype. But they were like individual efforts, like for example, musicians doing their things. So a couple of cricketers, I remember they were minting some of their things like deliveries and shots and stuff. But I'm not sure how that went, really. Not a lot of hype around that.
Well, I feel that's one of the benefits with Top Shots too, is that it is just like, you get the whole, I don't know, the all the money to like make a great platform and make the launches like seemingly fair. Like, yeah, it's centralized, but I think it would be different than like, Kobe Bryant. Sorry, not Kobe Bryant anymore. Rest in peace. But like Michael Jordan or something, like trying to make NFTs of his old plays and sell them individually. Like, it would just be a very different experience,
Yeah, so I think that about wraps up the NFT news for this week. Why don't we send it to Hunain now for a look at the markets?
Yeah, what's going on in the markets, Hunain?
Markets. September has been really tough for Bitcoin. I'm sure anybody who's been watching, it's fallen from, I think, 51,000 or 52,000 to as low as 39,000 this month. It's down 11% at the time, I think. Oh, but there are a couple of curious things that we've been looking at and also been mentioning in our newsletters in the past few weeks. So firstly, if we look at September is historically one of the worst months for Bitcoin, along with, if I'm not mistaken, March. March and September are the worst months for Bitcoin. And the good news is that October and November are the best months. Actually, October and February are the best months for Bitcoin, and November is also a really good month for Bitcoin, historically from 2013 onwards. So that's like a bit of like a really broad kind of a comparison. So if you think that since September is almost over, if you've kind of hung in there for now, I guess it's worth kind of, seeing what October brings. Definitely. That's one thing. Secondly, we've been looking at on-chain metrics for the whole month, for a couple of months now, for example, and most of them have been bullish, so to speak. Let's say if we look at the supply of Bitcoin on exchanges, that's been dropping since end of July, if I'm not mistaken, and it kind of coincides with that bottom we saw on July 20th, around 29,000. And since then, as the price rose, the balance on exchanges has also been dropping consistently since then. Also, it kind of for comparison, for reference, this balance actually started increasing in May, right before we had that big slide, and the price kind of started going down continually. So this is an important metric. So as the supply of Bitcoin on exchanges kind of goes down and continues to keep dropping, we are assuming that a lot of people who are moving the coins off exchanges, they don't want to sell them, at least not in the near term. So that's naturally bullish for the price. So we're seeing that trend has happened. That trend has kind of continued since the end of July, and it's still strong. I mean, I was looking at it yesterday even, and there's no meaningful change in that trend despite how the price is right now. So what we're kind of looking at, the implication is that people are buying at these prices and they're moving those coins off exchanges, which also makes sense because, at these prices, if you are kind of like a long-term holder, you don't really want to sell them. You don't buy them in September to sell them in September. Obviously, you're kind of buying them for the future. And Another thing that I wanted to kind of point out is that despite all of this selling, the 40,000 level has been holding reasonably well. I'll come to that in a bit as well. In terms of on-chain metrics, I also wanted to focus on a little bit on the net exchange flows. So that kind of is a metric that looks at the net result of coins coming onto exchanges and going out of exchanges, and not just the supply of coins on exchanges. So the net inflows and outflows are also important because they kind of show in the real time if people just are moving coins or are preparing to sell ahead of what they think might be a top or not, right? So that metric has also been net negative for most of September. I think really small exceptions, maybe I think 1 or 2 days or 3 days at best in the whole month, that metric was positive. So that meant that only in about 2 or 3 days, or let's say 5 days in this month, the coins that went on all exchanges, Bitcoins, were higher in number than the coins that came off those exchanges. So once again, that's like a bullish metric. Looking at, let's say, addresses, Bitcoin addresses which have Bitcoin balances of 100 coins or more, they've also been increasing steadily since mid-September, I think. Looking at that metric, since mid-September, I think, if I recall, there were about more than 120 new wallets added, which had balances of 100 coins or more. So that when we're saying 100 coins, we're talking about at these prices a minimum of $4 million in each wallet, right? So 120 or 30 wallets, that's 400 and something, or 450, $500 million worth of coins. I'm sorry if the math is a bit off, but I think that's correct. So essentially what I'm trying to say is that the on-chain metrics are kind of bullish, even though everybody is kind of, there's fear in the market, and even the greed and fear index has been flashing fear for a couple of weeks now, I think. But from a technical perspective, I think that the 42,000 actually is a support zone. I think this zone is between 40,500 to 42,500. I think this zone is really important. I was looking at the chart right before we started recording this podcast, and every time Bitcoin has broken out of this range, broken out of 42,500 to the upside, it's gone much higher. The first time this happened was on the 8th of Feb. I think that was with the Tesla news, and it went on to set those new highs around 64,000, I think. And then the next time this happened was in early August, after which we again saw Bitcoin doing 50,000 before it came down to test this level again. So this level is obviously key. And as long as it's defended, if there's a close, this month closes above 40,500, I would say it's a good sign. But obviously, there's a visible lack of bulls in the market as well. And you'll read this on Twitter as well. Everybody's talking about the fact that there are no bulls in the market. In my view, obviously, and that's kind of evident, by the way, from the funding rates. If you look at the perpetual swap funding rates, Bitcoin perpetual swaps across all these exchanges, they are mostly negative, or at least they were negative today, and they were very marginally positive in the days leading up to today. And that kind of shows the lack of bulls in the market. People don't really want to take on a lot of long positions. But in my view, when we say that, or when anybody says that they don't see bulls in the market, I think they're talking about retail bulls, right? Because by the time you see bulls, that means retail is there. The only bulls that you actually see in the market are retail bulls, because everybody else is smart money, right? So people who are buying the bottom or trying to accumulate, they don't come labeled as bulls because their buying does not send the price high. And when people say bulls are in the market, they correlate that to the price going high. But by the time that happens, the bottom is long gone, right? So obviously that's my view. I feel like the fact that there are no bulls in the market is not necessarily a bad thing, so to speak, or not necessarily a sign of whether this market is going to crash further or not. I feel like that could be because of the sentiment in the market right now. People are on the sidelines. And sometimes that's not a bad move. Sometimes you do want to stay on the sidelines and wait until the bulls actually come in, so you have confirmation, right? So investing at this phase in the market, as is always is the case, is a matter of your risk appetite, and obviously you have to do your own research, because the market can remain irrational longer than you can remain solvent. So there's always that risk there. And you should obviously do your own research. But I do feel like there's a good chance here that we could see Bitcoin not falling much lower. There's a possibility, obviously, that it could fall around, the support zone, the next support zone between, let's say, 35 and 38,000. But I would be surprised if it just goes down. And as on crypto Twitter, you can see people are kind of talking about sub 30,000 levels, even 20,000. I would be honestly very surprised if that happens, and out of a lot of money too. So, yeah.
Yeah, I agree with that. Zone you mentioned key support around 41,000, give or take 500 to 1,000. I've put that in our crypto market dailies for a long time, and I really don't want to see it lose that zone.
Yeah.
I mean, for me, I'm like fundamentally sort of permanently bullish in the macro term on Bitcoin. So now more than ever, I don't really focus so much on like noise, FUD in the markets, short-term moves, these sort of things. That said, I I would like to see buyers step in sooner rather than later, because I do think if we lose 41,000, I think we'll take a trip down to the lower half of the 30,000s, and I think that could turn into a revisiting of the bottom, as Maxwell called in Forbes, was it?
Yeah, he did.
Yeah, the bottom, around
29,000.
around 29,000, yeah.
Yeah.
Because since the all-time high around, let's say, 64,000, we did blast through that zone around 41 again, but then we put in a lower high, didn't we? So like in the macro time frame, I don't like the structure. I'm afraid this could end up being rather prolonged if the FUD continues, regulatory FUD from China, from the United States, infrastructure bill, what have you, and have this turn into like a big descending triangle, not entirely dissimilar to the one in 2018, right? But not the same either, but still a long, prolonged descending triangle. That would be, it wouldn't be the worst thing in the world, of course, if you're a hodler or whatever, but wouldn't be
Also
very
a
much
great time to buy.
There's always,
Wouldn't be
I
that
agree
much
with you.
fun.
I
It's
agree
always
with
a
you.
good time to buy, not financial advice.
Yeah, but it's not a lot of fun if it just keeps falling. No, but I agree with you. So the thing is that there is a lack of buyers, and that's the troubling thing right now. Nobody really wants to buy it. And also, there's another narrative that I also I agree with, is that there's not a lot of capital in the market to keep every asset afloat. So that's the reason why we see a cyclical nature here, where Bitcoin goes up and then else go up. It's not often that we see everything going up altogether, because of the lack of buyers, because the buyers are kind of concentrated. There's just one, let's say one cohort of buyers, and they're the ones who move around between Bitcoin and altcoins. So those buyers are not here yet. We can call them retail buyers or whatever, but it's just a lack of buyers right now. But the thing is, I'm kind of expecting that would change with, let's say, some positive catalyst in terms of news in the coming months, because that's what we've seen over the past this entire year, right? The price kind of starts moving first, and then we see that news thing. So whether it was leading up to the Tesla news, the price was kind of steadily growing, and then suddenly the Tesla news comes in, it's like boom, it's gone. And then the price, on the downside, the price kept steadily, Bitcoin kept bleeding, and then you'd see, FUD after FUD after FUD, kind of pushing it down, pushing it down, pushing it down. So if at this point, let's say the sellers are kind of exhausted, and we need like an influx of retail money, I would imagine that we could see the powers that be kind of start, adding positive news to the media.
Yeah.
Not sure if we can say that, or that should be cut or not.
Well, here's the question: what would the positive news be? Because
I imagine the ETF news. I would imagine the ETF, number one, and number two, I'm not sure if the SEC's thing with XRP, Ripple. Once again, I'm not sure if we can include this in the podcast or not. But if we see something over there, if we see something, let's say on the Coinbase front with the SEC, and let's say an ETF approval, I feel like a bunch of these things coming together could kind of send the market into another upward thing. but obviously it's far-fetched at this point. And it could be too short a time frame for that to happen. Maybe this will come together sometime next year early. Can't really say.
What's interesting, you're talking about the SEC, right? And from the US regulatory perspective is we just saw that Kraken, predominantly US exchange, just received a penalty from the CFTC. So not the SEC, but the CFTC. And the penalty they got was $1.25 million, which sounds like a lot of money, of course, to, you know, regular folks like us. But it's not a lot of money really for Kraken. So
Yeah.
Kraken was previously valued at like over $4 billion. So well, $1.25 million fine from the CFTC is the equivalent of like getting a speeding ticket. So it's interesting because the US right now is, I would say, you know, fudding the market. With the infrastructure bill stuff that isn't going the industry's way, the SEC Coinbase saga, just a lot of stuff is not pro crypto, right? You've got Elizabeth Warren saying that, you know, crypto puts the economy in the hands of shadowy super coders. You've got basically most, not all, of course, but most major people in major positions of authoritative power in the United States regarding finances, whether it be the Fed, Janet Yellen, these sort of things are not friends of the industry. But at the same time, when an exchange gets hit in the US, it's like a slap on the wrist, right? And we've seen that historically as well. Even a lot of big scam projects, ICOs from the past, get slaps on the wrist. So, you know, getting slaps on the wrist isn't really that bad. And like you said, if a Bitcoin ETF comes, then that's the reversal right there, isn't it?
Yeah, I think the Bitcoin ETF narrative, though, like, I don't know. Of course, I think it will come eventually. I think that it's just, you know, inevitable. But I don't know, just in the current moment that we're in, especially in the, you know, kind of traditional markets, you know, it's kind of post-COVID, like there was so much energy in the market, especially in like tech and like growth stocks. And I think, you know, regulators maybe started to get concerned about how like the market being overheated, like, you know, GameStop, all of this kind of, you know, forces, non-traditional forces interacting in the markets. And so I just wonder if like now would be the time that like introducing a crypto or Bitcoin ETF or something like that, like would be, you know, why would the regulators think that would be, you know, the opportune time? So I don't know. I don't see it necessarily in this administration's, or at least in the next few years, but, you know, definitely could be wrong on that. But I don't know what you guys think about the overheating market of the past year.
Well, I mean, that was the theory. I mean, so the Bitcoin ETF, right? It depends on the SEC's decision. And we've known that they tend to delay, reject. And that's generally the playbook for them. The argument almost always being market manipulation. And that's one of the arguments for what happened with Litecoin and the fake news regarding Walmart. Is a lot of the, let's say, conspiracy theorists believe that news, which was objectively highly orchestrated and duped mainstream financial media, that was sort of intentional as a way for regulators to say, look at how easy it is to manipulate this market with one fake press release. I mean, obviously they won't actually say that, but that example of what happened with Litecoin will be something they fall back on to say like this, the market is too easily manipulated for an ETF. It isn't. I mean, the markets to me are interesting though, because I'm sort of a perma bull in the big picture, but I really struggle to see where the sentiment shift is going to come from, because I know a lot of people think a Bitcoin ETF is coming like this year, and I really don't. I wouldn't say it's an impossibility, but I just don't think it's coming. So again, with like the Litecoin stuff I was just talking about. So like, I don't know. I really struggle to see the narrative. We obviously know that China is full blown not having it. Europe, is really focused on their digital euro. The thing about Europe though is you got a lot of countries there. Not everyone agrees and wants to play ball with like the European Union and whatnot. But then in the United States, I would say you have most people in this administration are not friends of the industry, and I'm not sure that the Federal Reserve will ever be a friend of the industry. So it's hard for me to see where the bullish narrative is going to come from.
Yeah, no, I agree with that. I think it's too short a time frame to expect any positive ETF news in this year. Maybe next year, but like you said, the main concern they have is market manipulation and lack of transparency and lack of price reliability. Things that organizations have tried to kind of fix with indexes and improved kind of like real-time price, like good positively weighted indexes, or I'm not sure how that works. But yeah, that. But the market manipulation is kind of more challenging to dispel.
Can I ask like the I don't know, nuclear war scenario? What if the U.S. doesn't raise the debt ceiling and ends up defaulting or partial defaulting, and the legitimacy of the U.S. dollar as a global reserve currency is questioned? Is that bullish for Bitcoin?
Sir, in what world does the U.S. not raise the debt ceiling?
Yeah, it would be an extreme, crazy, nuclear war scenario. But I mean, yeah, they have to come to an agreement. And it seems like it's becoming in the US just a more routine issue, that it just feels a little bit like, they're playing with fire. And maybe especially, as the rest of the world looks at what's happening with, US politics or the Senate, Congress. Yeah, I don't know. I would be, I could think of that being a potential scenario one day.
I think the debt ceiling thing is essentially market manipulation, because it's the same playbook every time. Markets get scared. Oh no, like, we have so much debt, which everyone already knows. It's like an absurd amount of money that people can't even actually like envision in your head how much money that really is. And then they always raise it. And, who is this debt to? It's the Federal Reserve prints the money, right? So like, yeah. I mean, I really sincerely struggle to imagine a world where the US defaults on its debt to the Federal Reserve. Like, to me, it's just a silly narrative.
Yeah. Well, there's so many crazy, like, did you hear the Treasury minting a $2 trillion platinum coin, and then just putting in its, like, saying that it's okay, this coin is worth $2 trillion and now we won't default. Like, it's so absurd, but apparently viable. I don't think anyone's really taking that seriously because it's so absurd. But
well, it's like, it's one of those things. It doesn't affect them. It doesn't affect the Federal Reserve. It affects the purchasing power of, the citizens' money,
Yeah.
But I guess to answer your question, I guess if the debt ceiling wasn't raised, I think that in the short term, it would be bad for Bitcoin and crypto. But in the medium to long term, it would be good. Anytime there's any sort of like market panic, I mean, I'm of a mind like crypto and Bitcoin, all this stuff, it's going to crash. Like anytime everything crashes, basically, except for maybe gold, then like Bitcoin's going down with it. But I mean, that's why I remain permanently bullish on Bitcoin, generally speaking, because it's just like a mathematical hedge against inflation. So one might say it's programmed to go up.
Yep.
Interesting.
It's just what we measured. And this is why Bitcoin needs to be the standard. Because if you measure Bitcoin in fiat currencies, then I mean, it's only going to go up, but the purchasing power of those fiat currencies is going down anyways. So.
when Bitcoin equals 1 Bitcoin.
That's right.
Anyway, thank you to Hunain for all those market insights. Thank you, Adam, for all the news of the week. Be sure to follow us on whatever platform you're listening to this. If it's YouTube, be sure to subscribe, leave a comment, maybe a like. We will see you back here very soon. And until then, we're going to send it.